Hey, how's it going everyone? Welcome to another RF crypto video. Hopefully everyone had a great weekend. Well, the crypto markets aren't doing very well. It's down by almost 3% from yesterday and it's now standing at 1.6 trillion. Almost half of the crypto market cap has been wiped off in the last 1 to 2 months. We are essentially in a bear market, even though we don't want to admit it, with Bitcoin falling 17%, almost 18%. Ethereum almost 30%, BNB almost 30%, Cardano over 30%, Polkadot and Avalanche edging closer to 35% in the last 7 days, and Polygon 40%. So we can consider this as a bear market or a mini one because as you can see here, the prices went from almost 70,000 to 35,000. So in the last 1 to 2 months, Bitcoin has lost half of its value, and basically the whole crypto market has followed that trend as well. Solana at one point was at $200, now at $87. It has suffered a big amount. And in the last 7 days, they've fallen by almost 40%, and we'll discuss why in a bit. Despite the fact that the crypto markets have fallen so much, it's fallen by almost 20% in the last 7 days. Leverage still remains almost at all-time highs. It's still at 0.21. It went down a bit because a lot of leverage got flushed out of the market when the prices went down. A lot of long positions got liquidated and this leverage went down. Not so much, has recovered slightly in the last 1 or 2 days, and it's only trending upwards. And this can be a dangerous trend, especially if most of the positions are in the long positions, because most futures and options derivative instruments expire on the last Friday of every month. And on the 28th of January, which is this Friday, it's the last Friday of the first month of 2022. There is a little bit of fear going on around that. Are we going to see a lot of leverage getting flushed out because the options and futures expire on that day? So let's keep an eye on this for the next few days. And Friday, I think it's at 8 a.m. Universal Time Zone, which is GMT 0, is when it expires. And we'll just have to see how far down it goes, because leverage might expire, prices might drop, and then leverage might get even more flushed out because of the margin calls that are activated once the prices drop. And in terms of longs and shorts, we can see that it's evenly distributed, slightly more towards longs, which is understandable given that the prices have gone down quite a bit. People have become a little bit more bullish that the price of Bitcoin is going to recover since it's fallen so much. But I wouldn't be so sure about that. We just have to keep an eye on the leverage. All of this green can get flushed out of the markets, or at least some of it, if the prices fall even further. If you expect the prices to go up and you take on a long leveraged position, and if the prices go down, then you can hit the margin call of your contract. Your whole position gets liquidated and the price of Bitcoin falls further down because that is a bearish signal. Dollar edges up on Fed and Ukraine jitters, cryptocurrencies slip. So the US dollar has strengthened a little bit on Monday as traders are nervous about tensions in Ukraine and a possible hawkish tilt by the Fed at a much-awaited meeting this week, while Bitcoin lay at a near 6-month low, a further sign of the risk-off mode. So it means that people are becoming more and more risk-averse in these uncertain times. So Mo Seong Sim, the currency strategist at Bank of Singapore, says that the markets are largely worrying and waiting, so they're fearful, focusing on the Federal Open Market Committee and Russia-Ukraine tensions. And by this, they mean by the FOMC, they mean that there is a rate setting meeting which kicks off this week. It's a 2-day meeting, and they'll decide whether to hike rates or not, which at this point it's more possible that they will hike rates. And at this point, they want to hike rates more aggressively, which the cryptocurrency markets are pricing it in as it is a bearish signal for the crypto markets. And one more thing is that increasing rates increases the cost of borrowing, and it decreases the amount of free money in the market. And we know that the bullish trend of 2021 from July, August until end of November was mainly driven by the quantitative easing, which the interest rates were nearly zero. And there was a lot of free money in the market because the Fed was buying bonds from the market and injecting cash, a lot of free cash to be spent around, people investing that cash in cryptocurrencies and crypto projects and causing the prices to rally at unprecedented rates. But at this point, all that has ended. The quantitative easing has essentially ended. The government has stopped buying bonds from the market by 15 to 30 billion a month, and they plan to hike interest rates. And each time that it's spoken, they want to hike interest rates more and more aggressively, which will make the cost of borrowing much higher, and it will decrease the amount of free money that's available in the market to invest in such projects. Clearly a bearish signal, clearly more risky for the markets, and clearly because people are becoming more risk averse, and because cryptos are risky assets, they'll move out of it, and that's why the prices went down. Tensions in Ukraine have also been increasing for months after the Kremlin massed troops near its borders, which the West says is a preparation for war to prevent Ukraine from joining NATO. Yesterday, the US State Department announced that it was ordering diplomats' family to leave Ukraine, which is a very worrying signal that something is about to go down. And when there is a signal of an impending war or fears of impending war, then the markets become more conservative. They tend to push back from riskier assets such as Bitcoin and cryptocurrencies, and this is, I think, mainly what's happening. The combination of more of a hawkish tilt by the Fed and a increased amount of tension between the East and the West, so the US and Europe and Russia, is causing people to flock out of the more risky assets like crypto. Traders are complaining about Solana's performance, raising questions about its status as a Wall Street darling. Greco, a market structure guru and former executive at KCG, stated that how can anyone possibly trust the Solana network with a real capital after a meltdown like today? And this is because as the price of cryptocurrencies across the board slid during Friday's trading session, traders large and small found themselves unable to execute transactions on Solana's blockchain, which is a protocol that has been touted by its proponents for its scalability and fast transaction speeds. These issues didn't only last on Friday, they slipped into Saturday. Solana's Twitter stated that they're experiencing high levels of network congestions, which are tied to excessive duplicate transactions. Obviously, Solana was not the only blockchain experiencing issues as cryptocurrency market prices plunge in general, but the network issues have taken the spotlight because it has become a darling of large trading crypto shops in the crypto industry and beyond. There are a lot of DeFi applications, a lot of NFT applications, and the fact that Solana is a top 10 cryptocurrency means that it will be in the spotlight, and any single type of network downtime is unacceptable because it is a scalable solution that's supposed to combat the effects of congestion and high fees. And now congestions have become part of Solana's worries, and this isn't good for the ecosystem in general. And Solana's network logjam has had ramifications across the whole crypto system. Not only does it make it difficult for retail market participants to, for instance, sell a Solana-based NFT, it also slows down large DeFi traders and forces them to work around the network. Also, for large traders moving tens of millions, they have to move activity over the counter and agree to settle once the chain is working. So a solution that is always said to be scalable, always said to be super quick, and now these people wanting to move tens of millions of dollars are basically bartering with other traders. They're saying, okay, we'll give this amount of Solana now, but when the network comes back online, you have to pay me this, which isn't very ideal. Also, other traders have complained about not being able to top off a leverage position in Solana on a decentralized venue. So what happens here is that as soon as the Solana prices drop, the leverage positions run the risk of reaching their margin call and becoming liquidated. And the only way for you to prevent that is to add more cash or inject more capital into that leverage position. And because the networks are so congested, a lot of these traders aren't able to do that, which means that the price keeps dropping, and the inability to add more capital into their position means that they're more likely to become liquidated, which isn't nice at all because you lose all your money. And Jim Greco said, well, Solana's price have gone down from $200 to $80, and this is because of all these problems. He says, I don't care about the price, but I can't get anything done on the network. This is becoming the most important narrative. How useful is the network? And whenever Solana faces trouble, the network goes down, and they have to solve all these issues if they want to remain the darling of the crypto ecosystem. El Salvador purchases 410 more Bitcoin amid market drop, as President Bukele says. So they bought this 410 Bitcoin for $15 million on Friday. El Salvador now holds 1,500 Bitcoin, which amounts to about $52 million at today's prices. They also plan to issue a $1 billion 10-year Bitcoin bond this year, which has a lot of upsides and downsides, and we'll have to see how this bond is implemented in order to gauge whether it is a good plan or not. And Bukele has been a consistent dip buyer over the past couple of months in a sign of confidence in the cryptocurrency's long-term prospects, especially since Bitcoin is legal tender in El Salvador since September 2021. And with the prices decreasing, and if the prices continue to decrease, there is no doubt in my mind that Bukele will purchase more Bitcoin for El Salvador's treasury. Cosmos token surges 8% amid airdrops and the building of a Polkadot bridge. So Atom, the token of the blockchain Cosmos, rose as much as 8% in the last 24 hours. Keep in mind that in the past 24 hours, the crypto market has fallen by almost 3%. Their investors are betting on the further upside of the high-speed blockchain, making the token among the few gainers on Monday morning. Strong fundamental factors supporting the price surge are the upcoming airdrops to Cosmos stakers and a bridge implementation between Cosmos and Polkadot. So this bridge create interoperability between Cosmos and Polkadot. Users from Polkadot and users from Cosmos will be able to interact with each other in terms of connecting and transferring data. So tokens of protocols built on Cosmos that were previously airdropped to stakers were among the biggest gainers on Monday morning, even as the broader crypto market saw nominal losses. With this, projects built on Cosmos provide additional leads to users, and the native projects automatically airdrop tokens to Cosmos stakers based on the total amount staked, resulting in further value accrual for Atom holders. Not only are they gaining APY on the amount of Atom that is being staked, also they're getting airdrops. If new coins are listed in the Cosmos network, they get an allocation of that in terms of how much they hold. Also, there is further chance of an upside for Atom because some analysts says that the EVMOS has increased interest for Cosmos among investors. Cosmos has been the talk of the town lately, with the impending EVMOS launch this month also driving attention. So EVMOS will allow EVM compatible applications to integrate into the Cosmos ecosystem. So EVM means Ethereum virtual machines. So not only are they building a bridge with Polkadot, now they're sort of building a bridge using EVMOS with the Ethereum network. So those programs or those applications that are built on Ethereum virtual machine or Ethereum virtual machines compatible, built on Ethereum virtual machines, will be able to be integrated into the Cosmos ecosystem. Finally, the Biden administration is to release executive order on crypto as early as February, and the directive would place the White House in the central role overseeing efforts to set policies and regulate digital assets. The Office of the Comptroller for the Currency, SEC, and CFTC have issued guidance letters, informal statements, and public rulemaking effort to direct how different aspects of the crypto industry should comply with federal law. However, these efforts have not been coordinated in a single document or by one agency. And it has been a trend where there is a lot of bureaucracy going on in the United States, and they're falling behind the curve in terms of crypto adoption, in terms of CBDC adoption, and now in terms of regulatory adoption. This is simply because of so much regulatory backlog going on. A lot of these government institutions saying which institution is actually going to regulate Bitcoin, they cannot come to a consensus, work together, and come together with a sort of like a crypto regulatory framework and say, here it is, here's what the individuals and here's what companies should follow. These are the rules they should follow in terms of trading with cryptocurrencies, in terms of operating with blockchain. However, it is quite good news that the Biden administration is to release an executive order on crypto as early as February, because it has been very long. There has been talk of regulation with nothing coming up in place. If they release an executive order and if the regulation enhances crypto trading, if it enhances scalability and adoption of the blockchain, then by all means, this executive order is more than welcome. And with that, we've come to the end of today's video. Thank you very much for watching. If you like the video, please leave a thumbs up. Please hit the subscribe button. Invest wisely. And cheers. I'll see you for the next one.